Yo, what's going on, Gem fam? Welcome back to Dropping Gems FX. You already know my main goal is to lace you guys up with advice and tips on how to take your Forex trading journey to the next level. And I'm going to bring you guys along my trading journey as well. Now, in this video, I'm going to be going over the Fibonacci Retracement tool.
Hi.
Okay.
And we use this tool in order to measure out retracements in the market so that we can possibly get in for another entry and ride that down. And towards the end of this video, I'll show you guys how I use that tool to get in multiple times on this movement on gold, which I'll show you now on the screen, where I made X amount of dollars, on this movement. So if you guys enjoy the content in this video, if you guys like the video, if you want more videos like this, support me by liking the video, subscribing to my channel, turning on that bell notification so that every time I post a video, you are alerted. And without further ado, man, let's get right into the video. For this week's video, I was a little bit kind of hesitant to go ahead and put out another, road to 10K update type of video. And the reason why I say this is because I feel like this would have been my third video uploading that. And I just feel like it's too much talking and it's not enough, educating. I may upload an update video here and there, but the point is that I don't want to make these videos like 30 minutes, 40 minutes, 50 minutes long, because in all reality, throughout the week I'm updating you guys maybe 2-3 times a day, and I'm talking for 10 minutes each time, so that time adds up. And what's on YouTube, the videos that are on YouTube, isn't current time. It's about like 2 weeks ago or a week and a half ago, where I'm making those trades on gold, when there's a whole another setup right now that's going on. And my account size is a lot bigger, right? So I'm going to be doing kind of updates and lives and all of that stuff on my Instagram now. So if you guys want to follow me throughout the week and see those types of update on that account, then you can follow my Instagram down below at Zimmerman. And yeah, catch those updates there. And also, guys, while you're catching the updates,
Oh!
While you guys are catching the updates, feel free to DM me any questions that you have about Forex. I'm more than willing to answer. No problem. You know what I'm saying? No issue with that. That's what I'm here for. I'm a resource for you guys, so I want you guys to utilize me. So let's get right into it. What do you have on your screen right now? XAUUSD, otherwise known as gold. Right, so what I'm going to teach you guys today is called the Fibonacci Retracement tool, and it looks a little like this. You can find this tool on TradingView, or basically on any, I think, trading platform that has any tools like this. Right here on the left hand side, you're going to click on this arrow, you're going to scroll down here, and you're going to have Fibonacci Retracement. Now, when you're starting off trading, you're going to have like the default settings on your Fibonacci Retracement tools. And that's kind of not, what you want, right? So here you go. I'm going to let you guys take a screenshot of my settings real quick. Take a screenshot of that, and then, just set yours to this. This is what I use. This is very, very basic. I'm going to show you how to use this and all that stuff. These are all my settings. So if you want to take a picture, copy that. I really don't care. It is what it is, right? So boom. Now, like we said, the Fibonacci Retracement tool. We use this to measure out retracements in the market. So what's a retracement? All right, let's go step by step. A retracement is something that typically follows an impulsive move, right? So say you have price, consolidating, right? Ranging, and we know we're going to expect a breakout from here. So we have a breakout, a retest, and then a continuation, or an impulse, right? So say you missed this move. Say it happened when you were sleeping, you didn't have a sell limit on, you just weren't ready to catch that move. Do not chase the market. Don't get in here, don't get in here, don't get in here, because the market can automatically pull back, you're in drawdown. Pull back, you're in drawdown. Pull back, you're in drawdown. And you know, that's the worst feeling in the world. Take it from somebody who's experienced this time and time again. All right? You do not want to do that. What you want to do is wait until you have some type of indication that you know, the impulse has stopped, right? The impulse has stopped. And that means that, you know, there's a wick on the candle, or the candle, you know, closed, and a bullish candle, in this case, a bullish candle formed and is on its way up. Some type of floor that you hit, something to indicate that. And a good example of this right now, I can show you on the screen, is going to be this. Right? You see this impulse? I'll do it on a daily time frame so you can see better. Okay, right here we have this impulse, and boom, now we have wicks. It's not, price is not really going anywhere. It's hitting a floor, and then we have this retracement, this correction, whatever you want to call it. That's what this is, right? That's what this is. Now, this is what you're gonna do, right? So you have the settings, right? You have an impulse, whether it be up or down. You have an impulse, and you have a start of a retracement. So let me do this so you guys don't think I'm making this crap up, right? So boom, right? Impulse is stopped. It's on its way back up. Now you want to gauge, you know what? I didn't get in here, right? I didn't catch this move. I didn't catch this move at all. And you know, I want to get in here. So what can I do? All right, let me take out my Fibonacci retracement tool. All right, I'm gonna put my fib on the high, I would say, and this kind of varies. So you would want to do wick to wick, right? Wick to wick. Okay. Wick to wick. Now, the zone that you want to aim for is going to be this golden zone. What's called a golden zone across all traders. I'm not, you know, I didn't call this that. That's what it is. Across all traders, it's a golden zone. You know, it's basically the zone in which there's a high probability of price reaching that zone and then continuing down on its way down. So this is where you will find a low risk entry into the move that you missed, okay? Into the impulsive move that you missed, right? So essentially, you highlight your golden zone along with all your other confluences, okay? All your other confluences. You highlight your golden zone and you wait for the market to reach that zone. You see price action within that zone. Do we have wicks? Do we have a pattern? Any type of valid entry that the market will give us, and you enter it, right? And then, you know, the rest is history, right? So typically, price will come over here. And I say typically because obviously the market is not perfect. So typically, price will come up here, come up here, come up here. You know, wick out, wick out, wick out, wick out, and then come back down, right? Typically what will happen. That's why it's called the golden zone. It's the 50% to the 618, the golden zone. Right here is what you want to mark out, right? But there are times where, you know, price will come up here, get past the golden zone, and wick out over here on the 705, and then continue down. You know, it happens. It happens, obviously. So what you want to do is just watch price action at that point in time. You don't want to get in just because it's here. You know what I'm saying? You want to see wicks. You want to see the right structure in the market for, you know, the continuation downwards. Now, I gave you an example of an impulse bearish movement. Let me give you an example of bullish movement. Okay, now so we have our what do you call that? Golden zone highlighted. And what we do now is just wait, right? So I'm gonna play this and see what happens. Boom. That's a little bit too slow. Boom. 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 Okay? Look what happened. Look what happened. I didn't make this up. This is reality. This is Forex, right? Price came right into this golden zone and wicked. Now, understand that this is the daily time frame. You have to make sure you understand, and you can use this on all time frames. I typically stick to the 1 hour at the minimum, right? And then I'll go to the 4 hour, obviously, and the daily time frame, obviously. But this is pretty simple and straightforward to use. Let me go down to the 4 hour so you can see what happened. On the 4 hour, what do we see? We had kind of like a double top right here. Boom, boom, right? Some rejection. We also came to almost equal highs of this last structure where price stuttered, reversed a little bit, and continued, and we had this impulse down, right? It's kind of stutter, right? So there's structure here. Now, this is one way to have called out this move, but this wasn't the only thing that was going on. Over here, we had structure. We had support over here, support over here, support over here. Why wouldn't we think that we would have resistance over here? Why? Right? So this is just another key level. Look how well, right? Look how well this golden zone lined up with the structure. I didn't move anything. It just lined up perfectly because that's what it is. So we have the support, turn resistance. We have the golden zone. We have equal highs. It hasn't gone over. That couldn't break that structure. So you get in for a sell. And what do you have? That huge sell-off, right? Huge sell-off to what is this structure right here. This support right here. I showed you guys an example of an impulse bearish movement. Let me show you guys an example of an impulse bullish movement, right? So let me see if I can get it somewhere. I might have to go to another pair. Let me see. Okay, so boom, let me clear my chart again. Now, we're still on the daily time frame. We're not looking at this stuff on the right? We're not looking. Let me delete this or just bar replay it. Let me bar replay this. We're not looking at this stuff on the right? We have this huge bullish impulsive movement. If I play this, you got to wait for it to stop. You got to wait for the impulse to stop, remember. So now on a daily time frame, we rejected. So this is a lot of pips, 275 to 214. It's a good amount of movement. It's about 600 pips right there. It rejected. So that's the end of the bullish impulsive move. So where do we want to get in? You missed all of this. Let me get in and try to secure some pips. I'm not going to get in here, obviously, because price has stopped. And even if you're like, okay, well, price has stopped here, let me just get in for a sell. No, don't do that. Because you're just, you're trying to get in following the market. You need to let the market come to you, right? So you go ahead and get in for a sell, and then boom, from here it goes up. You never know where it's going to turn around, right? We're just using the Fibonacci Retracement tool to highlight the best probabilities, right? So boom. Let me go ahead and put the fib on here, right? We're going to do it from wick down here, the start of the impulse. And I'll stretch it out to the top wick, okay? Stretch it out to the top wick. I guess this was the start of the impulse because of the consolidation right here, all right? So let's say that wick right there, because we did have consolidation here. So that's not an impulsive move. Price is ranging. Price is ranging right here. Then we start the impulse once we break out and retest. Boom. All right, now I'm just gonna play it, see what the market does, right? Wait, let me highlight the golden zone. Boom. Make sure you differentiate from your resistance, supports, and all of that good stuff. Delete this, John. Let's just play it. Let's play what happens. All right. Look at this. Look at this. Am I not that guy? Like, come on, man. Come on. This, I can't make this up. Look at what happened. Yes, it went past the golden zone. It wicked out. The market is not perfect, so don't think that it's supposed to just turn around as soon as it hits. No, it's not perfect. Essentially, if you would have waited to get into the golden zone right here, man, you would have been good. You would have been good. Price came and rejected like that. You would have been good. It would have been straight. All right, let's go for, you know, boom. 1881. You could have caught it on the way back up, because I know this happened fast. This happened fast. This happened fast. Crazy fast. Look, price slowing down, slow it down, slow it down. Boom, and post up. Let's say you missed that. Let's just say you missed that and post up. What do on the hour? Look, we're on the hour, and I'm going to bring it out again. Look, wick to wick, where it stops. Boom. And let me delete this golden zone up here. Let's say you miss this entry. What is this? An impulse. You wait for the impulse to stop. You set up the fib. You mark your golden zone. And you wait again. Wait for the market to come to you. That's it. You would have gotten here. And price would have just climbed after this. Right? Obviously, we were in the middle of the forming the big ass descending triangle formation, but you wouldn't have known that. You know what I'm saying? That took a couple of days for it to present itself. You know what I'm saying? So like, boom, you got in down there. Look how many pips you would have got. Obviously, right? Obviously, what you did first was use the fib to gauge where to get in for the bullish movement. But you have to understand this was also an impulsive bearish movement. So you could have took the fib here. You could have took the fib here to where? Here. Right? Been like, all right. Boom. Now this is two things you could have done. You could have took a buy. You could have took a long from here to here, one golden zone to the next, and took a short right back down. Like, come on. These are three moves you could have did. One, boom. Two, boom. Three. And just kept eating like that. Because if I bring out the rest of this triangle formation, all it is price going to the 50%, the golden zone, I'm sorry, and retracing. Golden zone until it breaks. You know what I'm saying? So guys, that is all I have for you guys for this video. If you enjoyed the content, if it was helpful to you, you know what I'm saying? If I taught you something that you didn't know, please support me, help me out. Leave a like, subscribe, comment down below. I need to get my engagement up, right? I want you guys to ask me questions. I want to answer your questions. I want to help you guys as much as possible. Also, what do you call that? Like I said before, I'm going to be doing live trades on my Instagram. So if you want to keep up to date with that, and if you want to keep up to date with the road to 10K, go ahead and add me on Instagram. The link is in the description below. It's also going to be on the screen right here. So that's it, guys. I hope you guys had an amazing trading week, and I'll catch you next week. Deuce.